Hi friends, today we will study accounting entries in the books of old company, that is amalgamated vendor company, which is absorbed or amalgamated into a new company. So a old company has to prepare a realization account. In the realization account, whether the assets are taken over by a new company or not, we are going to transfer all the assets and liabilities and clean the balance sheet of old company, that is vendor company. In this way, we are going to make a realization account and transfer all assets and liabilities at balance sheet value, that is book value. Look at the illustration 7. Prepare the realization account from the following information extracted from the books of Moonlight Limited. This is the balance sheet of Moonlight. Equity capital 3,75,000, which will be directly transferred to equity shareholders. Reserves and surplus, this is again having a right of equity shareholders, so it will be transferred to equity shareholders 2 lakh. So the entry will come equity shareholder, equity share capital account debit, reserves and surplus account debit. From liabilities, it will go on the debit side and to equity shareholder account. Bank loan, secured loan and creditors will be debited to realization account. Fixed assets will be credited, current assets will be credited. From the asset is the debit side, we will transfer the asset to the credit side and debit the realization account. Realization account debit to fixed assets account 5 lakh, to current assets account 3 lakh. 3 lakh. Fictitious assets are transferred to equity shareholders. Equity shareholders account debit to fictitious assets 25,000. PC is 3,50,000. So the entry will be by transferee company in the realization account, transferee company account debit to realization account 3,50,000. The amount is due. So the first entry in the vendor company will be equity capital account debit, reserves and surplus account debit will be directly transferred to equity shareholder, being equity capital and reserves directly transferred to equity shareholder. Equity shareholder account debit to fictitious assets account. A fictitious asset can be a preliminary expense or it can be a debit balance of profit and loss debit balance 25,000. So it is directly transferred to equity shareholders account. Realization account debit 8 lakh to fixed assets to current assets. All the assets and liabilities are transferred to realization account whether they are taken over by a new company or not. It is transferred at book value. Bank loan account debit, sundry secured loan account debit, sundry creditors account debit to realization account 2,50,000. So these all are external liabilities which are transferred to the realization account. Transferee company's name will come in the realization account until and unless we receive the amount from the purchasing company. So this amount is 3,50,000. Being purchasing company debited for purchase of for discharge of PC due. Thank you very much. I hope you liked the video. Please subscribe the channel.